Shares of United Spirits rise following a solid set of September quarter earnings, tailwinds from Andhra Pradesh's new liquor policy and improved product mix as well as growth.
Bandhan Bank is down close to 5% after seeing a near 12% decline in its net interest income, while net interest margin also contracts sharply. The management tells CNBC-TV18 that the gross slippages from the emerging entrepreneurs book itself were around 1,100 crore rupees.
Naveen Fluorine zooms after a strong set of second quarter numbers. The revenue rises 46%. Profits see a multi-fold jump. The management also ups its margin guidance to 28 to 30%.
Shares of TD Power jump close to around 6% on the back of a strong showing in quarter two, where revenue and profit growth of over 40% and order inflow rises by 45%. The management has also upped the revenue guidance to around 1,800 crore rupees from around 1,500 crore rupees earlier.
We2 Retail rallies as it launches a 300 crore rupee QIP at an indicative price of 2134 rupees per share, say sources. The issue can be upsized up to 400 crore rupees depending on the investor's response.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as we speak, the market's trading with a bit of a cut, though we have seen the broader markets actually doing a relative outperformance today. Hey, Mangalam.
Hi, Nigel. Another day where we're facing some bit of itchiness around that 26,000 mark. But let's see where we go from here. There is enough support around 25,750 to 25,800 as well. But let's get you some ideas for profit. Mid-caps are doing well. What is the idea for profit today from our colleagues at Money Control Pro? Kanchi Shah joins in to tell you.
So today's stock idea is Bajaj Auto. So this company is in a sweet spot right now, especially with the recent GST cut on two-wheelers which has reduced from 28% to 18%. Also, the festive demand is already strong and this move should give an extra boost to the sales in the coming months. Bajaj Auto, which has made significant strides in the electric vehicles, so it has regained its momentum in September also by climbing back to the number 2 position in electric two-wheelers with 19% of market share. It has also secured the second rank in electric three-wheelers. So this shows that its EV products are being well accepted and the company is steadily expanding its presence in the fast-growing electric vehicle segment. Bajaj is not just dependent on the domestic market but also in exports, where around 40% of its total volume comes from exports. With the Indian rupee staying relatively weak, the company stands to gain more from its foreign currency earnings, which could support profitability in the coming quarters. Overall, the rural demand looks better. Domestic sales are also recovering, along with exports supporting the performance. So at around 24.7 times PE at FY27 earnings, the stock offers decent growth from potential for investors. So I thus recommend Bajaj as a buy.
All right, thanks a lot for that. By the way, the markets actually have gone a sniff lower. We had moved to around 25,950, but from there actually we've seen a bit of a dip from the day's high. And by the way, a few stocks though continue to buck the trend. Tilak Nagar Industries, last few days, the volumes have been massive. We'll have to see who are the parties to those, large trades. But otherwise, the stock has moved very, very well. Last 1 month, up close to 18%, making a 52-week high today. Allied Blenders is the other one over there. That's up close to around 4%. So these liquor stocks clearly are in a world of their own.
Liquor stocks are in a world of their own. I'm just looking at two stocks, Nigel. And if the director can quickly pull both of them together, that'll tell you the story of the day. Swiggy raising 10,000 crore rupees, taking their cash balance to close to 17,000 crore rupees. What does that impact? It impacts its biggest competitor, which is Zomato. So Eternal comes up for you. Eternal has actually taken a sharp leg down, currently at the low point of trade as well. Because with 17,000 crores in Swiggy's books, it'll have similar amounts of cash as Zomato right now. Or Eternal comes up for you on the screen as well. That is down almost 1.6%. Let's move on. Let's talk about another earnings that came in. Mohit Malhotra, the CEO of Dabur, now joins us on the phone line on those numbers, the overall results. Mohit, as you directed in the second quarter update, were largely in line, 6% sort of revenue growth, EBITDA growth as well. However, there was a miss on volumes, and that's something that the street is taking note of right now. 2% versus expected 4 to 6%. What's the outlook here on the volume growth from here on?
Yeah, so Mangala, what's happening is that GST was a big disruption which happened, although in long term it's definitely a transformative reform. I think long term it will really benefit the business in terms of boosting consumption and putting more money in the hands of the consumer. But short term, and there was a pushback from the distributors and the wholesalers and the consumers themselves who were wanting to buy a low price stock. So therefore the inventory push which happened previous to the season, especially for us in terms of Chyawanprash, that could not happen. So therefore volume got impacted a bit, especially after the GST announcement which was made. That was the reason for maybe a low volume growth. But I think it's come much better than our peers, and 5% growth in the overall business is what we are really satisfied with, and we've gained market shares across our 95% of the portfolio. So I think relative to any other company, I think we've done reasonably well in the current quarter, and I'm confident. But some transition is going to lap over to October also, and first 15 days we will see inventory liquidation happening at different intermediaries, and only once the inventory is liquidated and the new rate and the price talk reaches the market will the situation normalize. But I think these are just temporary hiccups that we are facing, and post which things should normalize, and this GST reform should definitely usher in a good volume consumption boost and push the overall volume growth both in urban as also rural markets. Yeah.
So net of this disruption that you saw in the GST transition, and at the same time the first 15-16 days of October as well, you believe that there was some overlap out here. All things considered, what kind of revenue growth and volume growth can we expect in the second half? Can you quantify that, Mohit?
The top line, we expect mid to high single-digit top line growth, which will be backed by low to mid volume growth in the second half, and this is the projection that we've given to the street. First half got impacted because of the GST and the inclement weather that we faced, and the beverage business got impacted because of that. But I think second half projection remains what it was. There could be a little upside to it due to the GST transition, GST reforms which have actually come in. So we expect overall for the full year mid-single-digit kind of a growth for the full year and going forward. Yeah.
Hi Mohit, good to see you in as always. What about margins? What's your target in the next year?
See, operating margin for us has actually grown by 20 bips as compared to last year. So, and it's driven by gross margin increases of around 20 bips, which has happened in the India business also and in our overseas business also, despite inflation of around 8%, which hit us in the quarter two, which is very high inflation. Last full year inflation amount was the amount in the second quarter that we guys had, but we could easily push that entire inflation, and it was passed on in terms of price increases to the consumer, and therefore we got a gross margin upside, which flew into the operating margin due to the other leverage that we got from indirect overheads and S&M costs, etc. So we expect our operating margin for the full year also to be better than last year. Overall, our operating margin is in the range of around 19% for the first half, and third quarter is generally better in terms of operating margin. Overall, operating margin should be better than last year in the current year.
All right, so the next quarter looks better when it comes to margins seasonally as well. But, you know, we have to call out what outperformed. The oral care business, Colgate saw a decline, Unilever saw a decline. You did 14% growth. Is that sustainable? And how much market share have you added?
Yeah, so oral care business has been a star performer for us. And not just in the current quarter, I think consistently and sustainably, we've been doing very well in oral care. Dabur Red being our flagship brand, I think that's almost contagious. Anybody using Dabur Red continues to use it because it's a panacea for all oral care problems that you may have. It's doing very well. And so has Miswak, also grown by around 23-24%. Our Swadeshi campaign, which is also resonating, PM Modi's wave of Swadeshi, has done exceedingly well. And because of that, the entire herbal and natural segment is kind of doing very well, and it's 770 basis points ahead in volume terms than the non-herbal segment. So the non-herbal segment is growing at 2%, and the herbal segment is growing at 10%. So there's a 4.5 to 5x delta from a herbal to a non-herbal. So there is a tailwind. Plus, we've gained market shares also by 60 BPS in overall toothpaste segment, which takes our market share up to around 16.5, a highest ever exit shares that we guys have got. So two brands not doing so well for us. I think where we need to focus is Babool and Lal Dant Manjan, which is also what we are trying to correct. And I think overall, oral care is doing exceedingly well, and we are pretty optimistic going forward also on oral care. And there's a huge headroom, the total portfolio being around, give or take, around 18 to 2,000 crores, and there's a huge headroom, the total category being in the range of around 10,000 plus crores. Yeah, so huge headroom of growth also here.
All right, Mohit, I want to focus on the food and beverage segment. Out there, if you just pull up the chart, the growth is less than 2%. And that's because food has grown, but beverage has been weak. And it's been the case for the last few quarters. What is your strategy to revive growth on the beverage segment?
See, the beverage business has always been a growth pillar for the company. It has always grown at a double-digit kind of growth. Past a couple of quarters, we've seen inclement weather, which is impinging the sales of our beverage business. To de-seasonalize the business, first pivot is that we are trying to increase or boost our food vertical. Our food vertical, we've taken a target of around 20% growth. We've grown this quarter by around 14%, driven by ghee, edible oil, etc., which have all grown by 20-30% growth. Even a homemade brand is under-leveraged. So that also we want to scale up, although it's a small business. Then the drinks part of the portfolio, we are really trying to push. And in the nectar portfolio, we're giving value for money. We're also plugging white caps in our pack price architecture, and 50 rupee and 100 rupee price points is what we are trying to plug. And the entire Real brand is being revamped with a new facelift in the whole category. So that's what one is trying to do. So, but the season is something that we can't predict, and I think it's a toll of the season. Despite season not favoring us in the quarter two, also our beverage business has been flat, and food and beverage category, despite GST, because GST rates have also gone down from 12% to 5% in the majority of the category, that is kind of grown by around 2%. A lot of inventory correction also happened because of GST pushback by the retail, because the season did not favor us. So that's how. In terms of season, the festive season has been okay for us. So we expect, as the season favors us, to normalize the beverage business.
All right, we take that point entirely. But, beyond the numbers, the announcement of you, making a commitment of almost 500 crores through Dabur Ventures. What kind of acquisitions and investments can we hear about, and by when?
So to provide a very focused approach to this M&A, Dabur Ventures has been launched, which is an investment platform established for investing into high-potential, new-age digital brands that demonstrate a strong potential and is closely aligned to our strategic vision. So there's a capital allocation of 500 crores. We want to look at companies which are in home and personal care, in wellness foods, and also in healthcare, and all digital-first brands, which will give us a growth boost to this vertical, and it should be focused. So that is why, and that is the rationale for putting this whole Dabur Ventures in place, etc. But this does not preclude the main M&As like Badshah, like Sessa, like Valsara, etc. that we've done in the past. That will be over and above the Dabur Ventures capital allocation of 500 crores. We've got 7,000 crores in our balance sheet, so the money will be used for that. And this is going to provide a boost to this whole investment. If you ask me if there's anything on the table is yet, we are evaluating a couple of targets as we speak. I can't tell you the names of those targets, but definitely you'll very soon hear good news from us. We are evaluating a couple of targets. Definitely, Mangalam.
Okay, all right. Mohit, thanks a lot for joining in, and we look forward to chatting up with you in the time to come. Well, that said, let's move on then. It's time to highlight our Super Pro chart of the day, powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand why behind the what. Now, here's today's chart and what it means for your next market move. Hutco, that's a stock on the screen showing an inverted head and shoulders pattern and a bullish reversal. As you can see, an inverted head and shoulders pattern is a formation as the stock approaches the neckline breakout, signaling a potentially powerful bullish reversal from a sustained downtrend to a new uptrend. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan a QR code that's coming up for you on the screen and subscribe to Money Control Super Pro. Plus, the festive season, there's a reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro. Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Keep an eye on the bottom of your screen, and Zydus as well as Lupin are in focus because Astellas in its call has mentioned that in fact they've gone ahead. That's Astellas, by the way, is the innovator of Mirabegron. They have gone ahead and raised the guidance for the drug by close to around 80%, which explains why you have Zydus Life that's moved to the high point of the day. And I think we should get a chart of Lupin as well. That spiked up as well. Astellas in the call mentions that it will not be hard on patent case to extend exclusivity, and the read-through is positive for both these two names. So that's why you're seeing a bit of a volume spike, and both those two stocks have now moved to the high point of the day. Well, that said, let's get to the management of Coromandel International. They have joined in, and it's been a very, very good quarter, actually, for the company. Hi, sir. Welcome to the show, and congratulations on a good showing. Well, the first half of the year has been good. Revenues, EBITDA, profitability as well. For the year, what kind of guidance can you give us with regard to revenue growth, as well as give us a brief number in terms of margin band?
Good morning. Thank you for talking to us. As you mentioned, Coromandel reported a very resilient performance for this quarter, as well as for the half year. For this quarter, Coromandel revenue report shown an increase of 27% and profitability of 17%. So as you know, the monsoon in the Kharif has been very good, and the offtake of agri inputs have significantly improved. Aided by the good monsoon and improved operational efficiencies across all our plants, we could report improved EBITDA margin as well. For the half year, revenue growth has been 30% with corresponding improvement in the profitability. All the fertilizer plants operated 100% capacity. And if we look at our procurement efficiencies as well as the improvement in the intermediate manufacturing production of phosphoric acid, all aided in improving the EBITDA margin for fertilizers. On the crop protection segment also, we have shown good volume in the export market, especially for our key molecules, Mancozeb, for which we have expanded our capacity at Sarigam. The plant has been put into use, and that has driven the profitability of crop protection business, where the margin has moved up from 15% to 20%. Overall, if you look at our fertilizer volumes, coupled with our DAP imports, we have reached the market leadership position in the phosphatic fertilizers with a market share of 17%, which is a very creditable performance. And also, as you know, the retail footprint, we have been increasing store a day.
Right.
At this 3,040 stores. There also we have seen all segments have been growing well. So overall, we are quite satisfied with the performance, and with good monsoon and a very good reservoir levels, which is more than 108% of the long-term average. We do expect a very good Rabi season and improved uptake for agri imports, whether it's fertilizers or crop protection or specialty fertilizers. We expect.
Sir, just to come in here, as you said, the revenue growth has been very strong. For the year, we should work with a 35% revenue growth. Will that be fair? And margins in the vicinity of 12 to 13%?
Absolutely, and the revenue growth, definitely we can look at 25 to 30%.
25 to 30% with margins at around 12 to 13%. We got that correct?
Margin bit varies. In fact, being a commodity business and fertilizer, we look at EBITDA margin per metric ton, which we have been guiding always 5,000 rupees per metric ton. That will continue to remain as such. In the crop protection,
can you repeat that again, sir?
On the fertilizer side, we always look at EBITDA per metric ton of fertilizer, which is always around rupees per metric ton, which we are confident of realizing it for the year as well.
What proportion? Can you give the absolute number again? How much is per metric ton? Because I think we're on a scratchy line.
EBITDA per metric ton of 5,000 rupees per metric ton.
5,000 rupees per metric ton is what you target in the fertilizer business. But, you have entered some of the strategic supply contracts with some leading global partners. We understand that. And at the same time, for you as well, your brownfield capacity on sulfuric acid and phosphoric acid comes on stream by the end of this year. How much that would be margin accretive for you?
Absolutely. In fact, we'll be commissioning this phosphoric acid, sulfuric acid in the last quarter of this current financial year. Its annual capacity is around 200,000 tons of phosphoric acid and 600,000 tons of sulfuric acid. In fact, our absolute EBITDA from this phosphoric acid will accrue full year from next year onwards. And that should also sustain this EBITDA and also helps in our raw material security as well.
And by how much?
We need to look at the math in terms of overall composition and the next year volumes. So it'll be too early to predict, but it is going to be a bit accretive for us as we
Okay,
move.
let's look at it this way. So currently, I suppose you are buying these products from suppliers, and versus that to now, how much cheaper will the production be?
As you know, these investments take time, and it has got security for raw material as well. We have into mining operation at Senegal, which secures rock for this investment. Factoring this capital investment on the capex what we invest at Kakinada, we can definitely say that at least 20% value addition should be there on per ton of phosphoric acid. So that's advantage we have, over and above ensuring that we have access to phosphoric acid for our fertilizer production.
Okay, got it. All right, sir. Thanks a lot for joining in and giving us those details. A short but crisp chat. We look forward to chatting up with you as the quarter does progress. For the time being, we'll slip into a short break, come back. We continue to focus on markets. Stay tuned. Welcome back. Well, one stock from the broader markets is really catching our attention is CPCL, Chennai Petro. We are at CNBC-TV18, a couple of months or so ago, we had highlighted that there possibly could be a refining capacity that could be in short supply globally. That's what's caused the GRMs to move up. And for Chennai Petro in particular, we had highlighted that the interest cost is coming down because they're going on repaying their debt. If I remember the number correctly, the debt was more than 10,000 crores around 4-5 years ago, which has come down substantially. So that's a stock that's gaining 4.5% today. There was big fund-based buying yesterday, and the last few trading sessions, in fact, it's seen a big move. The stock is up, I think, 15% just in the last 1 month or so. We'll wrap up on this edition of Chartbusters. Stay with us. We have the team of Trading Hour that's waiting for you on the other side, and me and Riyuma will be joining in to get you an exclusive interview as well.